Good morning. It's just before noon on Friday, the 1st of November here in New York. I'm Christian of CPM Group. I want to talk about gold and silver in the run-up to the election, avant le déluge, and actually afterward too. Run through some numbers there. First, I want to talk about political self-identification because I think it's something important that people should really be aware of. And then even before that, I want to talk a little bit about our video schedules. I'm going to be doing some traveling over the next couple of weeks to different places. So we have been doing these videos on Tuesdays and Fridays. And next week, the Tuesday video will actually come out on Monday. So one business day after today. Then on Friday, November 8th, we probably will not do a video. I will be traveling. And unless there are dramatic developments to talk about, we probably will not do a video. We have been pretty specific about what our expectations are for the economy and the political system and gold and silver in the immediate post-election period. And so I think that we've sort of warmed the stage there and gone through it, unless there's some dramatic developments, which we don't actually expect too dramatic. We do expect there'll be some very serious issues, though. The following week, on November 12th, we won't do a video. It will come out on Wednesday the 13th, by which time I will be back. So that's the schedule for the next couple of weeks, and then we'll see where we go from there. Before I get into talking about gold and silver, I want to talk about self-awareness and self-labeling politically. Communist, centrally planned economies. This is a table from a 1976 J. Aaron Gold Review and Outlook. And you can see our statistical position table, which we still use. And back then it was called the statistical position in the non-communist world. And under the sources of supply, there was mine production in the non-communist world, supply flow from the communist countries, and then official purchases and sales. My university work was in journalism and in international political science, where I was studying, among other things, I was focusing on the way communist countries traded internationally. So this was in my hand. I assumed control and took over the writing of the research and the production of the research reports at J. Aaron in 1980. 1980 was a very volatile year. And when I took it over and I was learning how to do these reports, and this is a picture of the 1976 report, the executives at Aaron said, it'd be great if we could find some way to call them something other than communists. It's kind of an offensive term. And I had to explain that to a communist, being called a communist isn't necessarily an offensive term. Communists like to be called communists because they believe in communism. But I said, that said, we're not talking about politics in these reports. We're talking about economics. And a better term would be centrally planned economies. So in 1980 with the silver report, and in early 1981 with the gold report that we did in January of 1981, we changed the term from communist countries to centrally planned economies. And we kept that into the early 90s. In the early 90s, the Soviet Union collapsed. The communist regimes of Eastern Europe gave way. Other communist and socialist countries were reforming economically and becoming less socialistic and less communistic. And so we changed the term from centrally planned economies to transitional economies. And some of our clients in the Chinese government and Chinese market took offense. They said, we're a communist country. What are we in transition to? And I said, okay, I understand, but you are, changing, reducing a little bit the centrally planned economy. I bring all this up because, Communists don't mind being called communists, and fascists don't mind being called fascists. And it's really ironic that we had this whole right-wing thing saying that Antifa was bad. And Antifa, as I understood it, was in fact bad. But there's nothing wrong or bad with being anti-fascist. And there are people who are proud of the fact that they're fascists. They call themselves fascists. They talk about how they really praise historical fascists like Hitler and Mussolini, and how they would like to emulate Mussolini, and how they were really thrilled the way Mussolini took over the government in 1922 in Italy by staging a march on Rome, where he called fascists and fascist supporters to Rome and said, march on the capital and seize control and demand that the king name me, Benito Mussolini, the president of Italy. So sometimes when I refer to people as fascists or communists, I'm not being rude. I'm just honoring their desire to be identified the way they are. That's their self-identification politically. A little bit of a point. People who disagree with me don't need to respond. They can just go off and cry in a corner. Let's talk about gold and silver before and after the election. So we did a lot of that discussion last week. This, while I was getting that 1976 report out, I grabbed our December 1980 silver report. And this is the table in it. And I want to show it to you because it shows the price swings in silver, gold, and platinum leading up to the last 5 months, leading up to the peaks in January of 1980. And then in the course of 1980 through December 12th. And you can see silver rose. These are percentage changes, trough to peak and peak to trough. Silver rose 450% in that period from the beginning of August into its peak at $850 on an intraday basis on January 21st, 1980. In the subsequent 4 months, it fell 78%. That's a big decline. In the next 4 months, it rose 125%. And then in the last 4 months of the year, it fell 38%. Gold, similar, up 196%, off 41, up 42, down 29. Platinum, up 139, down 39, up 35, down 25. After the peak, precious metals prices should be expected to be extremely volatile. There'll be people who say, well, gold hit a new record. It's going to go even higher. And then there'll be people saying, I'm going to take profits. There are people taking profits in gold and silver now at 650, I think, right now. There are people taking profits now. Expect volatility in precious metals prices over the next year. Now, the economic environment that we're facing this week, we saw real GDP, the advanced estimate, the first estimate of third quarter GDP, roughly in line with the second quarter and roughly in line with the GDP that we've seen since the post-COVID lockdown recovery in 2021, where we saw 4, 5, 6, 8, 7% GDP quarterly changes, and then it came off. And it's been, basically 2 to 2.8 to 2 to 4 since the third quarter of 2022. So we're sort of seeing a normalized, healthy economy. 2.8% GDP is a non-inflationary growth rate for the U.S. economy. We also saw this morning unemployment data and employment data. Unemployment rates were unchanged at 4.1%, And you can see the way the BLS reports it. Oh, yeah, it's up from 3.4, 3.5% at the beginning of 2023. And the jobs creation was very low at 12,000. Now, the BLS said that that reflected some seasonal factors and some strikes, reducing employment growth, and also the after effects of hurricanes Helene and the subsequent one, which disrupted economic activity in the southeastern part of the United States. I wanted to put that 4.1% into context. It is up from where we were at the beginning of 2023. It is lower than it was at any time, really, prior to going back to the Clinton administration, the end of the Clinton administration last year of that, when you saw about 3.9% unemployment. So, yeah, it's up, but it's at historically low levels. I also want to put the employment data into context. 12,000 job growth in a month is pretty bad. I don't necessarily think that it reflects strikes. There were about 40 or 50,000 manufacturing people who were on strikes in September. That doesn't really explain the big swing. But let's take a look at total non-farm employment, which is at record levels. And let's look at manufacturing employment, which is down from the record levels that we saw a year or two ago, but still pretty close to record levels. And much, much higher than what we saw really from the 1980s until recently. And you can see this chart on manufacturing employment goes back to 2000. Looks like it's about 2008, 2009. So coming out of the Great Recession. So putting the jobs data into context looks pretty good. We also got this week the personal consumption expenditures data, which was pretty strong and healthy, in line with the GDP advance expectations. And we saw the PCE inflation index data, which was pretty positive for the economy in that it was some of the measures were slightly lower and some of the measures were slightly higher than they have been. But we are seeing inflation, whether you measure it with CPI or PPI or the PCE inflation index. Inflation is running at about 1/3 of the rate it was running in 2001 and into early 2002 in the post-COVID lockdown surge of economic activity. So inflation continues to diminish. And by the way, it's very funny because I saw some politician advertisement talking about how the Democrats have caused inflation and how gasoline prices are up 53%. Didn't say 53% from where. I do know that on a year-over-year basis, gasoline prices are off about 25 to 30% and headed lower. But that reflects the fact that oil and gas production in the United States hasn't really fallen as much as some people would have you believe. And finally, the dollar. The dollar actually has been rising because people around the world are very much concerned about political risk and their economic futures. Macroeconomic data, GDP, inflation, employment, it all looks good, but if you are suffering economically, those aggregates don't mean anything to you. That cost George H. Bush the election in 1992. He kept saying, I don't know why people are complaining about the state of the economy, because if you look at the economic data, it's all good. The economic data are aggregates, and you can have 1% of the population or 5% of the population or 10% of the population doing very well, while the other 80, 90% or more are suffering. And he didn't get that and it's a lesson that politicians should know. So that's the economic environment. The political environment, we've gone through it. I don't like sports metaphors. Some of you have heard me say that in the past, but I will use one now. World Series ended. It's sort of like there are dozens of players on base spread around the world, and there's been a pop fly. The pop fly is going to come down, and somebody's going to catch it, or they'll fumble it, where the Yankees did in the last game of the World Series this week. Everybody's standing on their bases, waiting to see how that pop fly is going to be handled, where it's going to land, in a glove or on the grass. And then they're going to move. And how they move is going to be heavily dependent on how they analyze the political outcomes, not just the presidential race, but also the congressional races for the Senate and the House of Representatives. And that's where we are right now. And that's where we're going to be for the next several days, trading days. And it's probably going to be past November 5th. I don't think we're going to know what the composition of the House or the Senate or the presidency is going to be on the morning of the 6th of November. I think it's going to take some time, and we're going to have to see not only how the elections shake out, but how certain portions of the population behave in the election day and in the immediate post-election period. So, as I've said in previous videos, we think this is going to continue for some time, and the political risks will be very high, far beyond November 5th. And that is going to keep investors interested in gold and silver. So that's the political environment. Now, gold prices have risen very high. It's very funny because I had somebody say to me yesterday, oh my God, gold prices have fallen off a cliff. And I pointed out this is Thursday of this week. I said, yes, they've fallen all the way back to where they were on Monday. That's not falling off the cliff. Gold prices are trading at close to record levels. I misspoke before when I said 2650. It's closer to 2750 right now, today. Gold prices are at record levels, and our expectation is that they'll probably continue to be. There are signs that say be a little bit cautious here, and we've talked about the idea that our view is that the gold price is going to remain high November, December, January, February, into the first quarter of next year. But you can see some pullbacks from time to time. And yesterday was a pullback. Took us all the way back to Monday's prices. These are the futures and options commitment of traders reports through the 22nd of October. Most recent data that we have. Other data will come out later today. And you can see that futures and options investors, these are non-commercial positions, have been loading up on gold, really for the last couple of years. And, the gross long position is not at the record levels that we saw in 2019, 2020, but it's getting up there. And the gross short positions, the green one positions here, are off. There's a little bit of a spike in the middle of October as the price rose. Some people were taking profits. And the black line is the net position. It also is not at record levels, but it's at the fourth highest levels that we've seen in history. The other three periods being, 2015 into 2019. So investors in futures and options have been stocking up. But if you look at the commercial position, commercial shorts represent two things. They represent the fact that when investors go long futures and options, they are in essence trading against a commercial entity. So when investors or non-commercial positions increase on the long side, that gets reflected in an increase on the downside for the commercials, because the commercials, being market makers, take the position. If investors want to go long, the commercials are going to go short because they're selling those long positions to the investors. And if investors want to go short, the way they did back here in 2016, 2018, 2019, then lo and behold, the commercials go long. Investors, generally speaking, trade gold from the long side, so the commercials, generally speaking, are short. But not all of the commercials represent offsets of long futures and options. They also represent hedging physical purchases by commercial companies, banks, and dealers. When investors are buying physical metal off of dealers and banks, then the banks are unwinding some of their long positions in the physical market, and they'll unwind some of their short positions that are hedging their physical inventories. What we're seeing right now is indicative that there are some physical gold investors who are quite happy to take profits after a long period of time holding gold at $2,700, $2,750, $2,780 an ounce. So we're seeing some physical gold selling really around the world, and that is being reflected in this increase. It's a little bit different in silver, which I'll talk about next. Silver prices have risen. They're not at record levels, but if you look at it compared to quarterly average prices, they're pretty close to the record levels. Our expectation is that they will continue to rise for the next 3, 4, 5 months. There could be pockets of profit taking, as there were a couple months ago, a month ago. But we do think that it's going to continue. But we're seeing and hearing increased reports of investors selling. And we've had retail and wholesale dealers talk about running out of cash to pay for coins, refusing to buy non-coin, non-identifiable bars, and being more resistant about all that. Now, as with gold and other metals, when investors want to go long futures and options, commercials have to go short because they're market makers. And if the investors want to go long, as they generally speaking do, then the commercials go short. So you see these large short positions. They're not naked shorts the way people who don't understand this claim. These are hedges, partly of positions that they've sold in the futures and options market, and partly in physical metal that they're either buying back from investors who are selling, or they are hedging their physical metal that they lease out to wholesalers and retailers of investment products and manufacturers who use silver in their fabricated products. There's probably several hundred million ounces of silver. No, there are several hundred million ounces of silver that are owned by banks and dealers and leased out to producers, smelters, refiners, and a whole range of fabricators, as well as wholesalers and retailers of manufactured products that contain silver. And we're seeing that. Now, it's very important to note that the record short position were in 2016, and the record commercial short position was in 2016 and in 2020. And we're seeing high, large short positions on the commercial basis now, but they're not at those record levels that we saw earlier. So, again, conscious misstatements by people marketing precious metals to investors. Just to look at that a little bit more, I put it down and I actually put it in writing so that people can study this, because it seems to be a very hard concept for some silver and gold investors, and the marketeers or traveling potion salesmen seem to have a problem. And it's very funny because one of the most prominent dealers was constantly talking about how there's no silver left and how it's terrible, and people who are shorting the COMEX should be lined up and shot. Actually, hedges his physical inventories with COMEX short positions. But in this day and age, that kind of ironic statement just goes unnoticed. Speaking of ironic statements, the BRICS had its meeting in Russia last week. They came out with a 33-page final communique. There's a picture of the first page. There's a link where you can download the English translation. You can see it was produced by the Kremlin itself, and it's at the Kremlin. There is no mention of gold, and in fact, there's no mention of currencies in the final communique of the BRICS. Mr. Putin talked about gold. He showed a mock-up that he had someone in the Kremlin make of what could be a BRICS currency. But the BRICS group itself, including the Russian central bank, have no interest in a BRICS currency and no interest of any gold link to that currency. It's Mr. Putin's wet dream. Yeah, sorry, that's crude, but hey, it's 2024. That's all I have for now. Take care of yourself. Take care of people around you. You can go to our website, buy our Gold, Silver, Platinum yearbooks, other reports. You can look into our retail investor program. You can buy all sorts of things. There's a lot of free reads. And you can write to us at info@cpmgroup.com about how we can help you manage your precious metals and commodities exposure more effectively. Take care of yourself. Take care of those around you. If you're in the United States, vote. And we'll talk to you next Monday. Bye.